Petroleum reported an operationally weak Q3. Profits are down 97%. EBITDA is down nearly 65% on a year-on-year basis. Margins under pressure. Shankar, Managing Director of Chennai Petro, is now with us on the show. Thank you very much, sir, for joining in. First, some details. How were the cracks in Q3 and what is the trend looking like in Q4?
Yeah, thank you very much for having me on this show. The cracks, if you look at it sequentially, there has been a huge difference from if you look at the Q3 of 23-24 versus the Q3 of 24-25, there has been a huge fall in the cracks in diesel and also in the MS and SK. Whereas if you look at the sequential benefits, the HSD cracks have improved slightly. Whereas the MS and SK also, MS is a slight, it's almost same. Whereas the SK cracks, there's a slight improvement. But what I feel is that if you look at the overall scenario, with comparison of Q3 of last year, the cracks have significantly fallen this quarter.
Okay, sir. So could you give us a sense of how exactly GRMs panned out as far as Q3 was concerned? How do you expect it to pan out for Q4 and the trend that you expect going into FY26?
Yeah. See, actually, Chennai Petroleum Corporation has been going through a turnaround cycle of during the month of August, September, and October. So we have gone through this turnaround cycle, which is actually a natural phenomenon for all the refineries. So we went through this cycle and we have come on stream in mid of October. So if you look at our overall performance with respect to Q3 and Q2, you should appreciate the fact that the operational efficiency and operational efficiency has really gone up, and we have done quite well on the cycle at which the crude processing is concerned. So if you look at the cracks also, there has been a good improvement after November. October, November also, it was very sedate. There was not much of an improvement. However, in the month of December, it has slightly improved. And that is continuing in the month of January also.
Do you want to put a number to it, sir? What would the numbers look like in the subsequent quarter?
Subsequent quarter, it is too early to predict now because we are in the month of January. But as of now, the cracks have improved. You have seen that the diesel cracks are almost about $12 now. Although the MS cracks are not really very good, but diesel, which constitutes a significant portion of our product mix, it is quite good now. And at this rate, we can look forward to having a better performance in the coming quarter.
Give us an update, sir, on the Cauvery Basin refinery. We understand that you were in talks with banks to raise about 28,000 crore rupees. By when will the refinery come on stream? And if you could give us just details of the status.
Yeah, the company, along with Indian Oil Corporation, our parent company, we are going in that CBRPL project on a joint venture basis. So we have approached the market for debt funding. At the same time, we have also approached the government for the equity infusion in the market. So we are looking at the approvals from the statutory bodies to come in, and based on that, we have fixed a timeline of about 30 months from the date of final statutory approvals.
Understood that, sir.
39 months, sorry. Yeah.
Got that. So 39 months is the number that you've given. So once the Cauvery Basin comes on stream, how do you expect that to aid GRMs? You also spoke to us about how GRM has been on a trajectory of recovery, but it continues to trail below the Singapore benchmark. So what is the reason for that, and when can you go at par or beat the benchmark?
Yeah, first on the GRMs, if you look at how CPCL has fared with respect to our earlier last quarter, you will see that although the Singapore GRM is at $5, we are roughly $4.2, $4.3 we have done. This is to be looked at from the perspective of the turnaround that we have done in the month of October, because around mid only we completed all our shutdowns, and then slowly the production has been ramped up. And now today, if you look at our current production capacity, we are doing more than 100% of the nameplate capacity. So if you look at our GRM with respect to Singapore GRM, which was $5 previous quarter, we were at 4.2 on a core GRM basis. And looking forward that it would be better. Now, if you look at how CBRPL will be focusing on this area, I should tell you that CBRPL, we have a higher petrochemical intensity index. So whatever we are talking about with respect to Chennai Petroleum, this should be close to at least $1 or $2 more it should add to the bottom line on the GRM.
Understood that, sir. Sir, give us a sense of this, sourcing mix currently. Is there any impact that you can assess for us in terms of restrictions, if any, that come about on Russian oil? How do you see oil prices move on from here, and how does it impact your operations?
Yeah, oil prices, if you look at on a quarter-on-quarter basis, the oil prices have really changed a lot with respect to Q3 of last year. There was almost about $8 to $10 difference on the Brent and Dubai crude, which is considered to be the benchmark. And even if you consider it sequentially with respect to the previous quarter of this financial year, there has been almost $5 of increase if you look at the decrease in this respect. So what I am trying to bring to your attention is that we as a standing refinery, we need to actually plan our crude in such a way that we have more than 50-60% of the crude which is fixed on term basis. Therefore, there is always the sustained supply available for the crude for the operations. We also focus on some opportunity crudes and also on the spot crude mix. So we were looking at the opportunity crudes of about 20 to 30% in the previous quarter. And now we are looking at the spot market also. So we are looking at the changes that are taking place in the international market with respect to the crude pricing. And accordingly, we will take action for that. And as of now, we are quite insulated to what is happening in the coming quarter.
Thank you, sir, for joining in. Look forward to more conversations as the year progresses. Need to get into a short break.